Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. Into this video, I want to speak about gold. The reason for which I want to speak about gold is because we do have very interesting price action and structure. So let's get straight to the analysis. Starting here on the monthly, what we can see is that at the moment we are testing a very strong level of monthly demand and support. In fact, from here, all this move to the upside was created. Again, here, the market tested its zone and immediately started rejecting it to the upside. And at the moment, we're testing this exact same area of monthly demand and support, from which there is definitely the possibility for a potential rejection to the upside. So here on the monthly, everything seems pretty bullish and we could expect more potential bullish continuation. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see how the market, in creating this move to the downside, has also printed this overextended M pattern. And in general, after the creation of an overextended M pattern, what we would like to see is for the market to provide a correction. Now, since when you want to measure a correction, you have to take your Fibonacci from the high to the low of the impulse. If we do it on an overextended M pattern, this gives us a first upside target, which is the 0.32 Fibonacci retracement taken on the impulse leg of the pattern. Now, if we do this here on the actual chart, so if we take our Fibonacci from this high to this low, this gives us a first upside target, which is at the 0.32 exactly here, that we could expect the market to go and test. So far, by looking at the monthly and weekly, what seems the most probable move is a deeper rejection away from this monthly support given by this box that we have previously identified, all the way up to the first upside target, which is the 0.32 of the Fibonacci taken on the weekly impulse, which is also the last leg of the overextended M pattern. Going down on the daily time frame, what do we see? Now, from a daily perspective, I spoke about gold a few days ago after the market had created this W formation here. I made a full breakdown explaining all the reasons for which we could expect this rejection to the downside and completion of the pattern at the neckline. Now the market has created that move, and by the way, I will link in the description that previous analysis so you can go and check it out for more free education. And since the market has completed that W formation, we could expect a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if we go and see what we have when it comes to the COT data, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, and we check the data specifically for gold, we can see how with the last reports, net positions have been decreasing. We went all the way up from having 163k net positions down to 94k net positions, with 13k shorts added from an institutional perspective with the last report, and 10.1k longs getting closed, reaching a record amount of shorts, which are 146k, and a low record amount of longs, which are only 241k. So if we look where we were coming from, we can see that basically we went from having 338k longs all the way down to 241, and shorts went from 70k all the way up to 146k. And we can see that clearly reflected in the price action that has been very bearish, because from an institutional perspective, institutions have been shorting gold. Now, this needs to make us very alert and careful, because even though from a price action perspective, everything seems aligned for this move to the upside, we must keep in the back of our mind the knowledge that we still have very negative net positioning, and even if this move happens, is only a short-term move, because then we could expect more bearish continuation. So how we could be approaching this potential short-term longing opportunity here on gold. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for this potential rejection to the upside for the market to complete this short-term impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and basically intraday time frames, that is all part of the mentorship program. In fact, if you go to transparentfxtrading.com, you will see that the mentorship program includes a full course. And after the course, basically, you also have the possibility to access one-on-one live mentoring, bit market breakdowns, the COT data software, which is exactly the software that you have just seen, the trading station, which includes everything that you need as a trader all in one tool. And if you scroll down, you will see that after testimonials here, I have currently partnered up with Blueberry Markets. With this promotion that if you join the mentorship program, you basically, if you open an account with them, you have the possibility to get a full refund in your trading account of the mentorship program price. You can join directly here from the website at transparentfxtrading.com, and I'm looking forward to have you in it. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm. And I will see you in my next video.